Hey, new parents! Have you ever had any anxiety about how you might financially support your new baby? Well, today I'm going to share with you 5 critical steps along with 15 practical tips around what you can start to do today in order to help you feel more confident and also financially prepare for your child. First things first, you have to understand your baseline budget, which means what are you currently spending your dollars on today? I know this is one of the hardest things for us to look introspectively on, and sometimes it scares us, but it's one of the most important things you have to do because you have to know where you're starting in order to know what you need to do in order to cover the gaps. I would start by tracking your expenses for the last 3 months, and this could be looking at bank statements, this could be looking at your credit card statements, or anything else that you can get your hands on to see where your money is going after it comes into your checking account. It can be a little bit daunting to do this, but apps like YNAB and Credit Karma, which used to be Mint, are really helpful in terms of connecting all of your accounts and then showing you exactly how your money is being spent on in different categories. Once you know your spending habits and where you're spending your money, then you can start to take actionable steps to figure out what you need to do in order to support your baby when they come. The next thing is to estimate the cost that you'll have once the baby arrives. This could be all of the supplies that you have. It could be daycare expenses. It could be the hospital expenses. It could be as simple as the baby essentials that I recommend over here. For example, diapers alone can cost between $70 to $100 a month, depending on what brands you get and the frequency in which you need them. So it's really important to start planning ahead so that you avoid any surprises. So now that you have estimated your baseline budget and you have estimated the cost that you're going to start incurring once the baby comes, now you can start to look at the gaps of where you are today and where you need to be in the future. And there are a lot of different things that you can start to do today to help you fill in that gap between where you are today and where you need to be. The first tip I have is to sign up for baby gift registries. This will not only allow people to understand what you need and only give you what you need, but the second benefit is that it will allow you to get sample boxes of free goodies from these different organizations or companies that you sign up with. So some of them like Babylist, Amazon, Walmart, Target, they all provide you with a sample box of different baby things, and that will also give you some free supplies that you don't even need to pay for, which is awesome. The second thing that you can do is to start a side hustle. And this one might seem a little bit daunting, and I'm not even going as far as opening up a new business or anything like that, but these can be small jobs or small things that you can do to earn a little bit of extra income. Even something as small as $100 a month is better than nothing. Some options that you could even think about, and this is just to kind of help kickstart some thoughts in your mind, are driving for Uber on the weekends. It could be doing DoorDash on your off time. This could be leveraging any skills that you might have already, like graphic design skills and signing up for Fiverr to do some freelance work. If you have accounting skills, you could go and do some accounting work for a local business that might need some extra help during tax season. There are a lot of different things that you could do with the skills that you have in order to just gain a couple of extra bucks every single month, and this can help you start to fill in those gaps. Now, if you have a full-time job, another thing you could consider doing is negotiating your salary with your current employer. This one seems daunting. As a hiring manager myself, what I look for when people want to negotiate their salary is whether they are qualified, whether their performance has backed up their justification, and if there's a market need for that. So what I mean by that is if you look at the market value of a role in your area and you believe that your salary is beneath the market value of it, then you can go to your HR department or your HR representative and you can give them that data and you can show them that you believe that you are being underpaid for your certain role. So those are different things that you could try to do. Now, again, this depends on your performance situation, also your company situation, if they're able to provide you a raise and things like that. But it doesn't hurt to have the conversation if you feel that you are justified and have the qualifications to do so. The next thing that I wish I had done more of before was to accept hand-me-downs more often. And, when you think about babies, they grow so fast in the beginning couple of months. And what that means is they're going to be outgrowing their clothes within a month or two. So it doesn't hurt to consider secondhand clothing, especially in the newborn phase, because most of the times these clothes are essentially new. So go to any kind of online marketplace, it could be Facebook or any other local marketplace that you have, and look for secondhand clothes because this is an awesome place to get really, really nice clothing on the cheap. Plus, remember that almost everything that you're going to get is either going to get scratched, dinged, stained, or dirty in some way. So buying all of the most high-end finishes and materials and all those things might look nice for about a week, and then after that, it's going to get messed up. So it might make more sense to get the more functional and practical versions of some of these items versus getting the more expensive luxury type of items that are going to get messy in the future. This next area has a lot of different practical tips underneath it, and this is really around assessing your budget honestly with your partner. I would recommend focusing first on the 3 biggest areas or expense types that you have, which are transportation, food, and housing, and finding ways to try to decrease the spending here so that you can free up some funds for the baby. I have 4 different tips that might be able to help you free up some cash so that you can reallocate it to your baby. The first one is refinancing. So if you have a mortgage or you have other loans that have a higher interest rate, if the current interest rates in your area are lower, then you can start to consider refinancing or maybe even consolidating debts that you have with lower interest rate options that are there. The second is house hacking. So if you haven't heard of this, all this means is you get a place and you rent out free space that you have. So this could be an Airbnb situation if you have a space in your home that you aren't using very often and you are able to open that up for Airbnbs or things like that. Another way to house hack is to purchase a multiplex building where you live in one of the units and you rent out the others. So this could be a duplex, a triplex, a quadplex, or even bigger if you want to, if you have the ability to, and this will reduce your housing costs as well. This next one won't be as fun for you foodies out there. My wife and I, we are huge foodies, but when the baby came, we had to make some hard choices. So we decided to eat out less. And this did save a tremendous amount on our budget just by being willing to cook at home more, also to do some more meal prepping. We do like variety, so we don't do as much meal prepping as we could, but that's an option for you also, where you can buy more things in bulk and that will lower the cost. A side benefit of doing it this way was also that every time we decided to go out to eat now, it actually became much more special. The last thing you can do to start to free up some cash is to do something that you might not have heard of, which is negotiating your more costly bills. I'm going to focus mostly on your internet, your cell phone, and your insurance coverage bills that you have. Each of these, the rates always change. So there is actually some room for you to negotiate with these providers to say, hey, would you be willing to decrease or give me a discount or even ask for different discounts for new customers and things like that. There are some different tactics that you can use in terms of calling them and saying that you are going to go to one of their competitors if they don't give you a better deal. You kind of have to work on your negotiation skills, but there are ways for you to actually decrease these bills on a regular basis and start to free up some cash. Because if you think about even $10 a month of savings for your internet bill over a year, that's $120. So it does add up if you can start to negotiate some of those things. Now, I don't recommend doing this with your utility bills, which are your electric, gas, and water bills, because these are regulated industries, and so there isn't a lot of wiggle room in terms of negotiating your costs here. So once you feel that you have a pretty solid understanding of where you are currently, where your gaps are, and how you're going to fill those gaps, once you have some extra funds that you can allocate, you can start to think about how you want to plan for your child's future. The first thing is a college savings plan. So this could be a 529 or an investment brokerage account. It could be a lot of different things that you can start to do early on because time is on your side and your child may have up to 18 years before they get into secondary education. So use time to your advantage at this point and start to contribute into a 529 plan. I have some more details over here on how you can do that, and check out this video. Another one that I love is setting up your child for generational wealth. And what I mean by this is, what if you could contribute just a little bit of money every month until they're about 18 years old, and then you can just let it go as it tracks the stock market over the next 40 some years until they retire, and they'll be multimillionaires by the time that they retire. I have a video over here that walks you through every step on how to grow a $150 monthly contribution, and that will grow to $3.5 million by the time that they retire. Another account that you can look into is if your employer gives you the ability to open a dependent care FSA or a flexible spending account. This is a really nice tax advantage account where you can contribute up to $5,000 pre-tax into an account, and then you can reimburse yourself with those pre-tax dollars on any child-related expenses. And this could mean childcare, after-school care, summer camps, and things like that for your child. To break it down, if you get paid bi-weekly, all you'll have to do is contribute about $192 every paycheck, and that'll get you to the $5,000 limit for this year. The last interesting account that you could sign up for and start to contribute to is a Roth IRA for your child. Now, this one has some special stipulations where you have to have earned income for the baby, and I have a video over here that walks you through the steps on what you might need to think about in order to do that. Now, this last section is really about how to protect your child's financial future if something were to happen to you or your partner. I know it's not the best thing to think about, but it is something important now that you have children to think about what does happen if an emergent situation comes up and you're not around anymore to take care of your child. So the next thing you want to think about is creating a will for your family. This ensures that your wishes for your child's care and future are clearly articulated and are legally binding. Without a will, the government will actually decide what happens to your assets and what happens to your child, and it may not align with what your wishes are. This is a really simple thing that you can do today that will give you peace of mind and also prevent any kind of heartache in the future. The good thing is that this doesn't actually require an attorney to create a will, but if you want to, you can absolutely go that route. Freewill.com is actually a free service online that will allow you to create a will, and it will be legally binding. All right. So by following these 5 steps and like 15 practical tips that I've just given you, you'll be on your way to financially set up your kid for success. If you found anything in this video helpful, please like and subscribe, and you'll get notified when there's more parenting tips and hacks ready for you. Until next time, we'll see you later.